Apologies for that. For a moment, I think I lost my connection. So let's continue. So we'll be talking about the S&P Global Flag. Good afternoon, everyone, and our name is Rufus Kamau, markets analyst at FX Pesa, Flash and Services and Manufacturing PM. We have had quite a release since morning, and this is from major economies, including Australia, Japanese later in the day after the open of the New York session. So once you join in, kindly say hi on the live comment section, and I'll be grateful for your feedback. So hello, Harun, and thank you for joining the session. So let's get things started. I'll be starting with sharing my economic calendar. So flash manufacturing PMI, we look at services as well as the manufacturing sector. And in these surveys, we try to understand data that is going to impact the market, as well as manufacturing tend to take time before they have an impact in the market. And that's why they are considered as leading indicators. So if you go to quite a number of, I would call them purchasing managers or procurement managers, especially in the manufacturing sector, and you track the orders that they have for the month, and then compare that with the services sector, then you can accurately project the trends that that sector is taking. So if, for instance, there has been an increase in orders, we would be expecting that those manufacturers will be hiring more people. They will be engaging in higher production, and that will indicate the trends in the sector, as well as the potential growth in the national numbers or the GDP. And that's why. So I don't know why my screen is loading. So trying to get it fixed as we speak. Hopefully it will be stable now. So if you can see the economic calendar on your side, can they respond? So hello, Rachel. And hello, Peter Kironzi. Thank you guys for your responses. So now that we are back, let's look at what happened this morning. So first things first, the Australia expected with manufacturing, which was slightly below. What this says, whereas manufacturing is improving and it's almost getting into expansion territory. So for Japan, manufacturing PMI came in at 49.9, and this was higher than the Eurozone. We had the French data coming in, German, and when you combine all the countries in the Eurozone, the overall result was released at 11 a.m. And we had 45.6, which was slower than the previous reading, meaning that manufacturing is contracting overall in the Eurozone. Then for services PMI, it came in at 52.9, which was better than the previous reading of 51.5. meaning that overall we are seeing services improving way faster than the manufacturing sector. So for the UK, it was a similar trend. Manufacturing PMI came in at 48.7, diving deep into contraction territory from the previous reading of 50.3, whereas services improved to 54.9, up from the previous reading of 53.1. So the market reaction was quite positive. We saw the UK pound as well as the euro strengthening after the announcement. And now we are looking forward to another data release, and this is for the US at exactly 4:45 p.m., where we'll be expecting data for flash manufacturing PMI and services PMI. So manufacturing is expected to increase to 52.0 in the US from a previous reading of 51.9. So that's like 0.1 points. Then for services, we're expecting an improvement to 52.0. Across board, what we have seen is that an improvement in both manufacturing and services has led to a stronger currency, and a weakness in both manufacturing and services has led to a weaker currency. So in this case, while we trade the dollar approaching the New York session, the overall expectation is that if manufacturing and services are relatively strong, then we should be seeing the dollar strengthening, and if they are weak, then we should be seeing the dollar weakening. So among that and other news in the market, we'll be covering one major release, and that is Tesla earnings. So Tesla, the automobile electric vehicle manufacturer, is expected to report its Q1 2024 earnings this week, and that is today, right after market close. So Tesla stock has crashed, falling more than 40% this year. Today's earnings report might not be enough to salvage shares. So Wall Street is projecting first quarter operating profit margins of 7%, down from 11% a year ago and 19% 2 years ago. So lower profit margins will translate to lower earnings. Wall Street expects earnings per share of about 50 cents in the quarter, according to FactSet, down from 85 cents a share in the first quarter of 2023. So since the estimate likely doesn't take into account the latest delivery numbers, which missed expectations by a wide margin, investors should brace for a miss. So there's a good chance that Tesla will miss earnings today, and that might lead to a much bigger sell-off in the stock. So the focus will then turn on CEO Elon Musk, who often speaks at the post-earnings conference call. So Wall Street expects to hear about a number of things, including Tesla's pricing strategy, demand for its electric vehicles, its self-driving software and coming robotaxi event, and its plans to launch a lower-priced model. So that event is largely anticipated by investors globally. So we expect a lot of action to be happening on Tesla. So besides Tesla, there will be more big tech stocks that will be reporting earnings this week. And this includes Meta Platforms tomorrow, as well as Microsoft on Thursday. So we expect to see a lot of volatility in equities. And of course, if we happen to see these big companies missing earnings, then there should be downwards pressure on the S&P 500 as well as the NASDAQ. But then if they happen to be performing well and they beat earnings, then we could be seeing some form of recovery coming in on both on both the NASDAQ as well as the S&P 500. So besides that, it's time to take a deep dive into the global manufacturing, S&P global manufacturing for the UK. So here is a detailed analysis, just in case you'd like to go through it later in the day, then you will have it available. I will be sharing the link on the comment section. So you should see the link in the comment section. So next, we'll be looking at going forward, what are we expecting in the markets besides the manufacturing PMI. So we'll have new home sales data at 5 p.m. and we're expecting an increase to 668K from the previous reading of 662K. So the Richmond Manufacturing Index is expected to improve. And then we fast forward to tomorrow. So tomorrow, before we even get to the next market snapshot episode, we'll be having news before USDJPY quarter in the afternoon at 3:30. So at 4:30 a.m., we'll be expecting issue of inflation in Australia, and we're expecting that inflation remained at 3.4% in March, compared to the previous quarter where it was still 3.4%. So data from Australia usually comes quarterly. So in this case, we're expecting a quarterly increase of 0.8% in the consumer basket, up from the previous increase of 0.6%. So that's the expectation for tomorrow before we get to the market snapshot at 11 a.m., where the next presenter, who is Norbert from Uganda, will be discussing further on the events that will be prevailing in the market as at that time. So that being said, I think now it's time that we focus on the technical analysis, try to understand what's happening. And once we cover that, then hopefully everyone will understand how to approach the markets as we enter the New York session. So let's get to the charts and try to understand what might be the most important thing going forward. So I believe everyone can see my charts. So I'll be starting with the dollar index, which has been moving pretty sideways this week. So I can say confidently that the dollar index is in a consolidation, and the consolidation is literally following this path. First, it was sideways, but now it seems to be taking a path that is slightly rising. So this is what we are seeing in the dollar index, and these are across a span of 5 trading days, today being the 6th. So moving up, down, and today we have had a big drop downwards, and now the market attempted to recover down, and now an attempt to recover, which is more or less of a summary. We can say the market is just moving this way. So the dollar index, after making a big jump in the previous week, you can see the strong rally, then last week sideways, and this week. Then we will be waiting for the next big event. And of course, we have the core PCE price index on Friday, so that would be a key driver in the dollar index. So for now, with the dollar moving sideways, we have seen that there was a big jump in USDJPY, creating a new 34-year high at 154.77. And now there was a big drop here on Friday, followed by a recovery. So Monday moving sideways, and today being Tuesday, we are still seeing this sideways momentum, but now we have broken into a new all-time high. So it seems more likely like the dollar index, the USDJPY will eventually break this resistance and continue moving higher unless we get any news from the Bank of Japan, maybe perhaps something like a currency intervention. But since that hasn't happened, then the overall expectation is a breakout and the market moving further upwards. So this pattern is similar. We have seen it before. Notice this area here. Market facing a very strong resistance, attempting to drop, followed by a recovery, playing around this area before making a big move upwards. So in this case, if we think along those lines, then we can see that after the breakout here, we had a very strong momentum that rallied all the way up. So this was the momentum here. So from this area all the way up. And now the market is forming a similar pattern, an attempt to go down, followed by a recovery. And now we are about to break out again. So there's good chances that we will continue seeing a strong bullish momentum on USDJPY unless there is any form of intervention. So for EURUSD, this is what we are seeing, more of a sideways momentum. So a lot of projections that I've made over the last 1 week and this week, we have seen them moving sideways. And this means that these markets are basically consolidating. So if we can take a good look at this path and the way the EURUSD has behaved over that number of days, then we can see that here we are having a trend line that is slightly improving, but the upper side is sideways. So overall, we can see that there is slight bullish momentum, but the overall direction is sideways. So dollar index moving sideways, also looking at the EURUSD moving sideways. So for pound USD, it was moving sideways before it made a breakout to the lower side. And now after bouncing here yesterday, you can see it's attempting to complete the recovery journey and get to the previous resistance. So we had discussed that for pound USD, we're expecting a drop to 1.23064 yesterday, So it was pretty accurate, and now we are headed back higher. So the price action area to watch is 1.24181. So this area is what we observe now to see if there's a continuation or a bounce. So for New Zealand USD, we have seen this pattern form here, but then the market didn't drop as much. It moved only half as much, then pulled back up the same resistance, attempted to go down, and then it's moving up, meaning that volatility is really low in New Zealand USD pair. But then overall, this trend line is still being respected, so there's still chances that the market might eventually drop. So USD trading against the Swiss franc, we projected that there would be a breakout here yesterday. The market didn't quite break, so it happened to break this morning, pull back for a retest, and now we are looking forward to a continuation. So there's a good chance we will be seeing a continuation happening here. So after the breakout, these green candlesticks here, you can see the sharp drop followed by a recovery. So in this case, I would be betting on a chance that the market will now rally from this point and get to 0.91511. So as for USDCAD, we expected a strong bounce from this area, headed back to the previous resistance. But then yesterday, the market happened to break that area, and now it doesn't make sense to look for a position at the current price level. So potentially, we could be seeing the market now looking at this area as the potential bouncing point, which is the previous support in this area here. So in this case, we expect some further bearish momentum in USDCAD before the market makes a strong bounce. So be on the lookout to look for opportunities, especially signs that bulls are entering this market. So for gold, we expected that there will be a drop to this area here. So the area we had projected was here. So this is where we expected the bounce. And it was pretty reasonable based on the number of times that gold had previously bounced from this area. So we had 1, 2, and third time. And now as the market got to this area, I said we hold and wait and see if there's a chance that the market bounces from here. So that was not respected. Early in the morning, there was a big drop, and now the market has spent the entire day attempting to recover from the early morning loss. So it's still a significant area being used as a support previously and now turned into a resistance. And now that gold is bouncing back, there's a likelihood that it eventually gets to 23.24. So using a smaller time frame, you can see that in the last couple of hours, gold has been attempting to move higher. So I would target this area as a nice target of 23.24 before making the next decision in gold. So in this case, it's a pretty reasonable pullback. So once the market gets here, we observe the volume or the size of the candlesticks to see if there's more momentum upwards or if gold continues pressing downwards. So from the forward chart, this is how it looks like. So it was a pretty big correction, but now we could be finding support from here, especially when you consider the size and shape of the last forward candlestick, which is an indication of strong entry by buyers and a rejection of lower prices. So the Dow has continued surprising by being pretty strong. So after finding this resistance area, there was a break, a pullback, and a continuation, a pullback, and now another continuation, which means that now the Dow might be headed for a new high. So there is a key level here that was acting as support, now turned into resistance, and now the market is headed there. And then the next stage is on this previous resistance. So as for now, for like a really short-term goal, is that the Dow may eventually get to this area here. And based on the price action after that, then we could also be seeing a potential expansion to this particular resistance area. So as for tech, and this is NASDAQ 100 index, we had a breakout yesterday in the evening, a pullback and a continuation, which means that now we have a green light that the trend has changed. So in such a case, when you see the trend changing that strongly, then you expect the market will now begin making a bull run. So in this case, I expect a strong rally in the NASDAQ headed to this area. And this could be fueled by very strong earnings from Tesla. So also major companies in the aerospace and defense sector will be reporting their earnings today. So this includes Raytheon Technologies as well as Lockheed Martin. So once the two companies report their earnings, market open, it could be seeing a big jump here. So for those who haven't checked it out, I'll try and highlight both the stocks. So there's Raytheon. So this is how the stock have been performing. So it's a sideways momentum, meaning that the stock has been consolidating ahead of earnings. So a breakout might be coming our way after the earnings report. So this is a book pattern. For those who have been studying technical analysis, we know that this is a basic consolidation pattern, and at some point you expect to see a big breakout. So when this coincides with the earnings report, then there's a good chance we continue seeing upside. So stocks in the aerospace and defense tend to benefit more when there's instability, geopolitics, war. So Raytheon's technologies might be headed for a big break, either upwards or downwards, depending on the earnings they report. So second company that will be on forecast today is Lockheed Martin. So I'm trying to load this stock. It's taking some time. Okay, let's leave it for now. Yeah, it has loaded a couple of charts. I don't think if this is the full load. Because after the 22nd of April, yeah, that's a long run. So if you look at the daily chart for the last 2 months, it has been on a bullish trajectory. And now we are looking at a potential earnings report that we could see a new monthly high being created. So there's a good chance we see some more upside. So I'll look out for this one too. And besides that, if you look at the other charts, you look at Bitcoin post-halving after the inverted head and shoulder pattern. We discussed this yesterday that we expect to see some further upside momentum. So on the weekend, it was up. Then on Monday, some good rally. Today, there has been a significant pullback. And if you go to the 15-minute chart, this is how it looks like. So you can see that for the last couple of days, this has been the trend line. So this is Saturday, Sunday, Monday, and Tuesday. Remember, for Bitcoin, it's set up on weekends. So judging by the price action we are seeing here, it implies that we will see a strong bounce and price continues moving higher. So for Brent Oil, we had a very strong projection. I think the projection I made yesterday was pretty strong. I was expecting price to drop to this area and then bounce strongly. Didn't quite drop to the exact area, so there was a strong bullish entry at these price levels. So you can see the two green candles, actually three. So after this, it pulled back a while and kept going up and erased all the early morning losses. Then today, the market attempted to go up, faced resistance, which we had marked at $87.031 per barrel, before dropping further back downwards. And this is towards the same bottom that we had experienced yesterday. So we have already seen another bottom in Brent oil prices. So this was the low yesterday. Today is the same low. And now the current candlestick is indicating a strong bounce, which means that Brent oil could as well be bouncing from this area, headed for higher price levels. So in this case, we'll be observing the close of the candlestick, which will be a signal for bullish entry and the market reversing the losses we had seen earlier in the day. So potentially going for this previous high of $87.031 per barrel. So if I had to choose a chart for the day, then Brent oil would be my chart. So I'd be going for Brent oil because we are bouncing from a major support level and fundamentals are indicating bullishness, especially with what we have seen with both the manufacturing as well as services PMI, which are also a key indicator of oncoming demand or supply in the market. And in this case, we are seeing economies across the globe improving, which creates a higher demand for oil. So in this case, there's a good chance we'll see Brent oil bouncing from here, and making a rally towards yesterday's high. And if we break that area, then the previous target we had on Monday now becomes a reality at around $88.79 per barrel. So European equity indices are also pretty strong and bullish. So after the big drop here, market didn't continue, eventually broke the resistance and kept going up, which means that we have broken that trend line and the market may be headed higher. So now we have a new higher high, and that's for the EURUSD 50 index. So if you look at the French 40 index, these trend lines have only been weakening. So any trend line we have been trying to connect the highs have also been broken. So if I zoom out and we go to, let's say, the 4-hour chart, notice that if I remove all this noise, zoom out, then we have this kind of formation where the market was on a pretty strong bullish momentum. Sorry, very bullish momentum here. Then it entered a flag formation on the 4-hour chart. And then after the flag formation, what we are seeing here is a breakout, meaning that the market may now be potentially headed for the previous high. And this could be playing out real soon, especially if the Eurozone was to consider going for early rate cuts. So lastly, we have the UK 100, which managed to form a new all-time high yesterday. So after forming the new all-time high, there was immediate sales, especially since considering it was a major resistance level. You can see the number of points the market had found resistance on that line. But then after hitting this area, pulled back a little bit. Then today in the morning, we formed a new all-time high, pulled back, attempted to form another one, pulled back, but still there seems to be some form of significant bullish momentum. So we could be seeing the market pulling back and then going for another all-time high. So as per now, it seems more likely, especially the 4-hour candlesticks, indicating bearish momentum. And I'd like to mention something here. So for those who are studying candlestick patterns, if you have a bullish momentum from here, this bottom, market raised to a resistance on a trend line, and then forms this sequence of 3 candlesticks here, which we would describe as an evening star, and then the next candlestick is bearish, then that should confirm that we are now looking at the potential pullback in price. And with the evening star, I would be looking for this area to potentially strike a short selling position, especially if the market was to break below this high here. So this was the previous high at around 80.39. So a trade, let's say a close below the trend line would mean that now we're moving lower. It would mean going for short selling positions. But if the market gets back and trades above, then we start considering a continuation of this all-time high. So remember, when a market is at an all-time high, it's not always a good idea to go shorting that market. So you want to support that market. And from what we are seeing here on the 4-hour chart, on the daily chart, after the breakout, the market came back for a retest and then continued higher. So in such a case, you expect some momentum upwards. So in this case, depending on how the candlestick closes, if it's green, we go long. If it's red, then we go short. But for now, based on the previous candlestick, it seems more like the market will continue moving higher and form a new all-time high. So that's it. That's the end of the presentation today. I'll be checking if there's any questions. I'll respond to the questions before we end the session. So a good question, how do you know of such events? So we know of such events because they are tabled on an economic calendar. So just go to an economic calendar like FX Factory and Forex Factory, or FX Trade or Trading Economics, and you'll be able to see all the events that we are expecting in the near future. So I believe that was the only question for the day. So hello, J Squad, and thank you, Reality. So I see there's a question from Stanley. How do you scale up? How do you go all out on positions? How do you pause where I'm blowing all? So the thing is, in trading, you never want to let your guard down. So majority of traders who lose their money in trading is because they don't practice proper risk management, and they become sore losers. So for you to scale up, the number one thing that you need to do is to think in terms of probabilities. Number two thing that you need to do is to focus on making a small percentage of profit consistently. So that can vary from one trader to another. You could be making 2% per month, 5%, 10% per month, and so on. So once you got the skill in, and now you know that you are really good at what you do in trading, now scaling up might mean going for a bigger deposit account. So if on average you are trading, let's say $500, 1,000 account, now you move to a $5,000, $10,000, $100,000. And now you realize that the lot size you'll be using will not be the same. And of course, even a small profit of 5% in a bigger account will make more sense, and that might help you get the same exact feeling you're describing in the comment below. So is the UK 100 negatively correlated with the pound, like the S&P with the dollar? Yes, that has been the case over the past couple of years. But then from the price action of last year and this year, they are both positively correlated. So SP 500 and the dollar have been moving in the same direction. And of course, the UK 100 and the pound have also been moving in a similar direction. So we are living in crazy times where central banks are trying to fight inflation, which won't come back to the 2% target. So they have to keep rates higher for longer. And at the same time, there's a lot of investors looking to store value in equities because the cash or the fiat cash is losing value over time. So that has led to an insane amount of value being pumped into equities, leading to new all-time highs. Do you have a mentorship? No, I don't have any such program. So thank you very much, guys. Thank you for your time, and I hope to see you on the next session. So if you're just beginning your trading, check out the Novice to Pro series on FX Pesa YouTube. Also remember to check out the links below to open a new trading account. And of course, we have new episodes coming up, the Bullish Banter podcast, as well as the Financially Incorrect podcast. So they're available on all podcast platforms. So make sure to check them out.